Hey traders, welcome to a new video. In today's video, I want to talk about how to avoid false breakouts. Okay, so you know how it goes, right? You see a chart, right, and you like the setup and you take a breakout trade over here. Okay, price goes in your direction for just a bit and then it suddenly reverses and you lose money. Okay, so this always happens, and if you've been losing money, then this video is for you, because in this video, I want to show you how to avoid being caught in a false breakout. Okay, I want to help you reduce your losses and help you increase your win rate when it comes to trading breakout. Okay, so previously I recorded a video about trading breakouts and how it's one of the most beginner-friendly ways to trade, because from a psychological standpoint, you see your profits immediately. You see that your position's in the green immediately. Okay, but I think in today's video, I want to show you how to avoid taking trades which will fail. Okay, taking breakouts which will fail. Okay, so you probably know this. You probably know that there are a lot of fake outs in the Forex market, okay, especially in the Forex market, because the Forex market is very whippy. Okay, there's a lot of algos which likes to drive price up and down. Okay, so in today's video, I want to show you how not to, short here, right, and have your, have price just retrace as though this level means nothing, and then after that plunge back down. Okay, I want to help you avoid this loss. Okay, so what I'm going to do today is I'm going to give you 3 tips on how to avoid false breakouts. Okay, so ideally you apply all 3. Okay, you apply all 3. If you are still struggling as a trader, then you want to make sure that you apply all 3. Okay, because that will really increase your probability drastically. Okay, so in today's video, let's get into these 3 tips. Okay, the first tip is actually how do you avoid this false breakout. You want to avoid trading counter trend breakouts. Okay, so this is a very straightforward tip, but something that I see a lot of people a lot of new traders, they struggle, or rather they ignore this very important concept. Okay, they always like to trade counter trend for some reasons, right? They like to pick market bottoms, so please do not do that. Okay, always trade with the trend breakouts. Okay, so what do I mean by a trend? Okay, so if you are new to trading and do not know how to identify a trend, okay, I have a 3-day trading guide for you. So in the 3-day trading guide, I teach you how to identify the market conditions. Okay, so the link is in the description, so just check that out. Okay, but right now I'm going to give you a quick crash course on how do you identify a trend. Okay, so basically in a trend, you just want to identify a swing high. Okay, you want to have a high, you have a low, you have a higher high, and you have a higher low. Okay, so the moment you have this pattern being established, then you are in an uptrend. Okay, so you want to trade breakouts with the trend. Okay, so in this case, if you have an uptrend, then you just want to buy the breakout somewhere here. Okay, you do not want to be trying to sell this breakout, even if price goes down. You do not want to sell because this is still in an uptrend. Okay, you still have your high here, low here, higher high, higher low. Okay, so you want to avoid this. Okay, this is a very simplistic tip, but please do not overestimate this tip, because it will really save you a lot of money if you just take this tip too hard. Okay, so that's the first tip I have for you. The second tip I have for you, it's what I call the pre-breakout structure. Okay, you want to watch for a pre-breakout structure. So what do I mean by a pre-breakout market structure? Okay, let me give you the definition of it. Okay, so I have the features over here. So there are actually 3 features. You want to have a well-defined support and resistance level. Okay, so what do I mean by a well-defined support and resistance level? I mean that there must be minimum 2 touches and you should be able to see it easily. Okay, that's the first feature. Okay, I will go into detail of each of these feature in the next few slides, so not to worry. Okay, the next one is actually a 20 moving average. Okay, in this case, you can use a simple moving average carry or a trend line carry. Okay, and the last one is a series of engulfing candles attacking the level. Okay, attacking this level. Okay, this key well-defined support and resistance level. Okay, so let's go into each of these features. Okay, so over here, we have the first feature, which is your well-defined support and resistance level. Okay, so I have prepared a chart for you over here, and you can see over here that this is the goal. Okay, this is goal chart, and we are in H4, and you can see that this level 1495 is a very strong level, is a very well-defined level. Okay, because you have one touch here, you have two touch, you have three touch, and you have four touch. Okay, so it meets the requirement of having a minimum of two touches. Okay, now you might ask me, why do I insist on having two touches? Why can't I just do it something like this, right? One touch, and then I buy it here. Okay, now the rationale is very simple. Okay, you want to have two touches because that would mean that there are more traders trading around that level. Okay, meaning that when you have something like this, okay, let me just clear this. When you have something like this, the more touches there are, it will mean that there are more sellers over here. Okay, when there are more sellers, what happens is that all the sellers put their stop losses above here. Okay, so what happens during a breakout is that when price goes up, this stop losses is actually a buy stop order, which actually further pushes price higher. Okay, so when you have multiple touches, what you are essentially saying is that there are a lot of stop losses above the level, and these stop losses are actually buy stop orders. Okay, and buy stop orders will actually further fuel the movement. It will further help price to move higher. Okay, so you want to watch out for that. You want to see that there is a minimum of two touches. Okay, so that's the rationale for it. So the first feature would be you want to see a well-defined support and resistance level. Okay, so what about the second one? Second one is actually the 20 moving average carry or the trend line carry. Okay, so in this case, back to the goal example, this case study that I have for you here actually has both 20 moving average carry as well as the trend line carry. Okay, so you can see that I draw a trend line connecting this low to this low over here. Okay, and what happens is that when I project it out, you can see that price was supported here again. Okay, in fact, if you look at the moving average, this orange line here, you could see that there was a form of support being found at the same time. Okay, so this is what I mean by a 20 moving average carry or trend line carry. That means that price is being supported or resisted, as it bounces off the 20 moving average or trend line just before it hits the resistance or support. Okay, so in this case, we see that the 20 moving average and the trend line is actually being supporting the price just before it breaks out over here. Okay, so now you might ask, let's say if you trade a breakout like this, where do you put your stop loss? Okay, with the 20 moving average carry or trend line carry, the good thing about this is that you can put your stop loss below the previous swing point low. Okay, so in this case would be here. Okay, and in this case, if you have this 20 moving average carry or trend line carry, you can drastically reduce your stop loss. Okay, because you do not need to put your stop loss here, you can put your stop loss here. Okay, so that means from a risk reward perspective, you are actually risking less to make more. Okay, and if you adopt a adaptive position sizing where you actually position size, do your position sizing, that would allow you to build to buy a bigger position, right? Because your stop loss is tighter, right? If your stop loss is this versus this, okay, you can buy a bigger position because the distance to your stop loss is tighter. Okay, and that would increase your reward, right? Because if this is say 20 pips and this is 40 pips, then you can buy 2 times bigger position, and when price goes up, you actually make more money because your position size is bigger. Okay, so that's how you set your stop loss. Okay, and this is why you want to have the build up. You want to have this 20 moving average carry and trend line carry. Okay, the last thing you want to have is the series of engulfing patterns attacking the level. Okay, so just a quick crash course on what the engulfing candle is. Okay, basically I covered this in the 3-day trading guide. So if you have not downloaded it, just make sure you get it because it's free, and I do go into depth in the trading guide. So basically a engulfing pattern is very simple. You just have a closing price that is higher than the candle body. Okay, so in a bullish engulfing, the closing price of this candle is higher than the open price of the previous candle. Okay, in a bearish engulfing, okay, the opposite is true. The closing price of the bearish engulfing pattern, it's lower than the opening price of the previous candle. Okay, so that's a very quick crash course. Okay, if you need more help, just check out the day trading guide. Okay, but in this example, you can see that there were one over here at the bottom, one engulfing pattern here, and another one over here, and this one is not really an engulfing pattern because the closing price of this bullish candle didn't close above the body of the previous candle. Okay, but it's almost, it almost closed above. So in this case, I would say that this setup is still a very good setup. Okay, so there you have it, all three features, right? Just a recap about this chart. You have the key support and resistance level with multiple touches. You have 4 touches. Okay, you have the moving average over here, the orange line. Okay, carry, and you also have the trend line carry. Okay, and you have the series of engulfing candles attacking the level before it bursts up. Okay, so this is how you avoid a false breakout. You look for these 3 features. Okay, when you see that there are these 3 features happening in a breakout, you can know with certainty that this is a high probability setup, and then you can take that trade. Okay, if you do not see any of these features, then the best is to avoid avoid trading the breakout. Okay. Now, the last tip that I have for you is that you want to avoid trading breakouts before a new trading session. Okay, what do I mean by a new trading session? Okay, I'm talking about the pre-Euro or pre-US trading session. Okay, so I do not know where you are based in. Okay, but personally, I'm based in GMT +8. Okay, so these are my timings. For me, the London opens at 3 p.m. Okay, and the New York opens at about 8 p.m. Okay, so what this would mean for me would be that I would not want to trade, just before the London session and just before the New York session. Okay, because if you were to trade before the Euro session, you are not taking into account what the Euro traders will do, right? What the European traders will do. Okay, so it's better for you to wait 1 hour until after the London Open. In my case, would be about 4 p.m. Okay, and 9 p.m. Okay, depending on where you are, it's going to be different. So what you can do is you can go to forexfactory.com. Okay, you can click on the markets tab, which is on the top, right? Scroll down and you should see something like this over here. Okay, and then you can see what time does the London market and the New York market opens. Okay, so you want to avoid trading, just before a new trading session. Okay, about 1 hour, maybe 2 hours before, you want to avoid trading into a new trading session. Okay, so this tip over here will save you a lot of money. Okay, because it will help you not trade into all these false breakouts. Okay, because a lot of times what happens is that during the Asia session, the market breaks a resistance, but in London it sells back down, and it does the fake out. Okay, so if you trade after London is open, after the London has firmed up its movement, you're going to have higher probability trades. Okay, so this is very important. Just take note of this tip that I have for you. Okay, so that's it. These are the 3 tips that I have for you. Okay, just a recap. Okay, and then the first tip that I have for you is that you want to avoid trading counter trend breakouts. Okay, always stick with trend breakouts. Okay, do not trade counter trends. Okay, that's your highest probability setup, is with trend breakouts. Okay, the second thing is you want to watch for a breakout structure. Okay, I gave you 3 features. The number 1 feature is you want to have a key support and resistance level with 2 touches. The second one is actually you want to have the 20 moving average carry or trendline carry. And the last feature is that you want to see a series of engulfing patterns leading up to the breakout. Okay, and the last tip I have for you is that you want to avoid trading breakouts before a new trading session. Okay, so these are the 3 tips that I have for you. Okay, make sure you apply it. Okay, if you are new to this channel, please give us a thumbs up, right? If you benefited from this video, if you like this content, right, please subscribe to us, because we have a lot of videos like this. Okay, so also make sure to check out the other videos we have. We have a lot of free videos, how to trade, right? A lot, how to manage your stop loss, right? We have a ton of this. We create videos almost, every single week to help you become a better trader. Okay, so if you have any questions, any specific issues that you are struggling with, just leave a comment down below, and my team will put together something where we'll create some content to help you, right, to give you share our thoughts on the issues that you are facing. If you need a recommendation about what kind of trading strategy will suit you, just leave a comment down below and we'll be happy to help you. Okay, if not, thank you for watching.